Hi, hello, this is Ganesh Sinturu, your stock market profit coach and author of the book One Page Stock Market Plan. And today we are going to continue from where we left yesterday, the stock market basics part 2. And yesterday we had seen about stock market basics part 1, like what is available in stock market and why companies need to come into stock market. All these things we had seen yesterday, right? So before we proceed to today's topic, please go and click the subscriber button so that you will get continuous video updates on stock market and mutual funds and everything related to unlimited wealth in your life, right? So let's begin from without further delay. Let's begin today's topic on stock market basics part 2. Okay, so the stock market first part, this is what we had seen. Please go and check the yesterday's video, previous video. You will get all these informations related to stock market basics part 1, company formation, shares, why company needs to come to stock market, what is the difference between stocks and shares, what are the stock exchanges available, and how to invest in stock market regulations, how much returns you can expect, and why market is going up one day and coming down the next day. So these are the things we covered in the first stock market basics part 1. As part of part 2, just look at a few important points. Who can invest in stock market? If you are interested, and if you are really interested to invest in stock market, yes, you can invest in stock market. Yes, anyone can invest because market is available for everyone. Even for we are all called as retail investors. You and me are called as retail investors in stock market, so we always are welcome. And it depends on most important thing. Once you learn how to invest and how which stocks to choose, then you are always welcome to invest in stock market. And there are two important things in stock market. This is much more important because what do you want to know? Do you want to make money or do you want to trade? Because if you want to make money, it is possible in the 6 months or 1 year time frame. And if you want to create wealth in the long term, 3 to 5 years or 10 years, the wealth creation is much more possible in stock market. For that, you know that you should know the difference between trading and investing. Trading is nothing but you are buying a stock and selling it on the same day, and it's just speculative, like this stock price can go up from 500 rupees to 510 rupees, and the 10 rupees margin is what you make the profit based on the number of shares you trade. And this can be done on a daily basis, this is called as trading, and this can be done on a weekly or a monthly basis. There are options through which people make money, and people lose money as well. This is the reason where people from riches become racks, because from top they come to bottom. That is where we had seen from bottom to top they come, and most of them, they try to, for them it's like they try to become rich and they try to stay there. But the people who had money, who come into stock market to make more money, without knowing this concept, they will lose their money. But instead, if you choose to invest in stock market, meaning you buy a stock, buy a delivery of a share. For example, you buy Maruti. Instead of doing trading on a daily basis, you buy Maruti shares and hold it for 3 years or 4 years. Still, you will make a lot of money than trading on a daily basis without making losses, because this is what I understood in the last few years of investing in stock market. Okay, and there is something called one more, this the intraday I mentioned. On a daily basis, if you're buying and selling, that is called as intraday trading. And another option is called as derivative trading. Derivative trading is nothing but the equity, the shares, based on that. Instead of buying and selling on a daily basis, you will say that in the next month you will buy a share on this, if the price is this much, I will buy it out, and if the price goes up, I will sell it out. All these are called as futures and options. Your option to buy, based on the future price, based on the option, you can buy or you don't need to buy. All these are much more advanced concepts of speculative trading, and you need to know about the international market, US market, Singapore market, and how market will open up in India based on these conditions. And then if you do these kind of tradings based on the forex, so many economic indicators are there, then you should know. And all these are huge things based on which you should know. But instead of learning all these aspects, if you just simply buy and sell with certain concepts, for sure one day or the other you will lose entire money, because it's all about leveraging. With just 1 lakh of money, you will do investments for 10 lakhs, trade for 10 lakhs, and that too in derivative trading. If you lose money, you will lose 10 lakhs. If you make money, you will make 10 lakhs. So one day you will make 10 lakhs, the next day if you lose 15 lakhs, everything is gone. You will be in a much bigger mess. So that is the biggest risk when it comes to stock market. So derivative trading is, if you avoid derivative trading, it's well and good. And this is what even Warren Buffett has said. Derivative trading is somewhat the biggest risk anyone can take in their life. And what is the risk? And if you look at trading aspect, as I said, on a daily basis, if you do, the risk associated you can take is 2% or 3%. If you go beyond that, you will lose your entire money. This is the exact risk in in trading. Whereas in investing, you buy a stock, you hold it based on the fundamentals. For example, the ITC, for example, Hindustan Unilever, the Britannia stocks, the Nestle, all these are products which you are using in a daily life, and even after 5 years, these companies will stay. What you need to do is monitor all these companies on a quarterly basis or on a weekly basis in your mobile apps. This will help in growing your money to the great level. So this is more important in the aspect of investing. The risk is almost minimized. The longer you stay, better is the risk reward ratio. Whereas in trading, you can't stay longer. That is the biggest disadvantage on a daily basis. Or that is in derivative trading, the leverage is bringing even more riskier thing. So the problem is that in trading there is a huge risk involved, whereas in investing risk is minimized. The more you stay, better is the opportunity to make money as well as create wealth. And this is something you should avoid, and at any cost. Investing based on tips, you will get a SMS or email saying that you can invest based on tips. They'll be sending you SMS that buy 1 lakh lot at 15 rupees or 20 rupees and sell it at 20.50 or 21.60. All these will come at messages or email, and it's like broker manipulated. Still it is happening. Better to avoid. And all these messages will come only in penny stock, because that is where you will get interested, because you will think that for 2 rupees you can buy thousands of shares. For 20 rupees you can buy thousands of shares, which with easily, right? Instead of going for 200 rupees shares, for 1000 rupees you will buy 5. But if even for 20 rupees you will be buying and much more bigger stocks. That is the advantage of these people, and they take advantage and they'll go right over the people. So don't go behind the SMS or email. If you're going for proper subscription, there are companies like Wealth Insight, valueresearchonline.com. If you go there, they provide subscription service separately. Dalal Street Journal, where they provide a subscription service. equitymaster.com, all these are registered companies through which you will get a proper service, and you will get an answer like why you should buy at this price, why you should not buy, why you should sell. All these conditions you will get. So the better option is go behind the companies which are registered in stock, which are registered with SEBI, through which you will avoid all these nonsense SMS and email, and you will get a clarity should you buy it or not. And what are the best books? I had heard people asking me which book I should refer so that I learn more. And these two books are close to my heart, because this is something like Parag Parikh, one of the greatest value investors, had provided. So, just a minute. Provided by Parag Parikh. These books are by Parag Parikh, the Stocks to Riches as well as Value Investing and Behavioral Finance. He is no more, but his Parag Parikh mutual fund is still there, as well as the value investing concept, which he always teaches, is still there with his followers, with his colleagues and friends. So please do read this book. It's very simple to understand. Every common man can go about read these books. And these are my favorite magazines, which I am reading for last more than a decade, I can say. All my knowledge about the stock market, mutual funds, and personal finance has been shaped up by Outlook Money, Wealth Insights, Dalal Street Journal. Thanks to all these magazines and all other Business Standard, Outlook Business, all these at any point of time had helped me. And you can always refer magzter.com, magzter.com, where you will get digital version of all these magazines at a common place. And the next thing is what is bull market and bear market? When the market is going up for the last 1.5 years, it's a bull market. To put it straight, from 2008 market crash, from 2009-10, there was a slowdown, but from that time till now, it was a bull market. Only during March 2020, we had a bigger slump of 40%, and everyone thought it will change. But the point is, again, because of liquidity pumped in by US and all developed nations, the market started going up like anything. There was a blip, but again it started going up. So it was a continuous bull market from that time. So, but what is bear market? Like what happened for the from the rally of 2003 to 7? It started going up in Indian market like anything. The same happened in US market also. So the bear market is something which goes again, which will stop the bull rally like anything. So if it is like a bull and bear will stand, that is how you will see the photos in all the stock market exchanges. So when the bear market was hitting hard, So what happened in 2008? Mortgage crisis hit. Automatically the stock market, the markets across the banking stocks and all the related companies had fell like anything in a pack of cards. Like everything was coming together. And in 2008-9, it took 6 months for Fed to realize, and they started acting on it. By that time all the stocks had crashed, many people came to road, and everybody had lost money like anything. Even in India at that time, I still remember, because that was the time I started working. In the my first year bonus came, I invested. I lost 40% of my money because I didn't know the difference between stock market, mutual funds, and ULIP. I was trying to learn after this aftermath of this. Because of these reasons, I started learning. Now I am I am doing videos. This is something crazy which I wouldn't have known, which I wouldn't have expected in 2008 to do. So this is a complete change. So thanks to all the 2008 market crash, I will say right now. So the bear market is something like opposite, where people interest will be so pessimistic. Market stock price will be very cheap, but they will not be ready to buy. Whereas in bull market, stock price will be very high, but people will be ready to buy at any cost, because that is the market characteristics. So to simply put it, in bull market, people will be greedy enough, they will go behind stocks. In bear market, they will be fearful enough, they will never ever buy the stock. So how you should play the market? You should play the opposite. Be greedy when everyone is fearful. Be fearful when everyone is greedy. This is something, the important line which I still remember, provided by Warren Buffett, our greatest investor who lives in our timeline. So it is great to the way he thinks, the way he performs is so good. So because it is a lesson everyone should know, because he has been reading 500 pages per day for the last, let it be 30-40 years. How many books you would have read, how many knowledge you would have gained, but still he is so patient enough to not jump into stock market in the last 1 year. He is sitting in a cash pile of stocks, and he's already having a n number of stocks. He's the largest wealth creator in the world. Other people had product or something. This man has invested his money and made money to multiply. So that something needs to be respected. So I have a huge respect for Warren Buffett. And finally, what are the uncertainties in market? I already touched upon these points: the greed and fear. So it is almost, that is the reason many people fear when before, but the bull market changes the complexion. It is like market is going up day by day, and it is crossed 50,000, 52,000, 53,000, and all the retail people will start jumping, and that is when market will start to lose its temper, lose its momentum. It will take a lot of time, but for the last 1 year, it has been like a rally which has been going on. So this is an example. So this can happen in the future, any point of time. If you look at the market characteristics for from the time of listing, greed and fear are like a pendulum. This is the example, I loved it in one of the books. So it's like a pendulum, where one side it's extreme optimism, where its greed is there, and it will come down. It will not stop in the middle space. It will go to the extreme fear, or a fear or negativism, pessimism. People will not be ready to invest. So as I said, it will moving here and there, but people will always look towards pessimism or optimism, and they will never ever try to understand how it is operating. So the person who is able to understand how it is operating, and if you're able to pick up the right stock and stay invested for a long time, irrespective of pessimism or optimism in the market, that is where you will make lots of money in the market, as well as create wealth over a period of time. So hope you got understood about today's topic. It's all about starting with the risk factors, and right, let's look at the summarize who can invest, trading was investing, and what is the risk involved in trading and investing, and you should avoid investing based on tips, and the books by Parag Parik, right, and the magazines what you can refer, and finally the bull vs bear market, the as well as the uncertainty in market, greed versus fear. So these are the things which you should cover, and hope you got a clarity on how you should invest in stock market and the basics of stock market part 2. Thank you so much for watching. Please share this video with your friends if you want your friends also to know more on stock market, and please refer the first video if you want to get a clarity on how companies are coming into stock market. So tomorrow we will end the session with stock market part 3, the basics of part 3. If any questions, please post it. I'll be happy to answer your questions. Thank you.